Good afternoon, traders. This is Christian from Market Trader Group, and this is your end of day market recap for Monday, July 22nd. I haven't done one of these recaps in a little bit. I was on vacation last week and also dealing with Wi-Fi issues with Wi-Fi out to due to storms, and then of course on Friday we had the tech issue, right, with CrowdStrike. I'll talk a little bit about CrowdStrike today, but a lot more interesting names and movers to talk about for the day. So first of all, what I find kind of interesting is the VIX. I haven't talked about the VIX in a while, but the VIX was down almost 10% for the day. I talked about how Friday's candle was a bit inconclusive. It was kind of what I was looking for, but not exactly. What I'm referring to when I say that is just basically that when we see episodes, I call them either episodes or bouts of volatility. It basically just means that from time to time we are going to have market pullbacks in uptrends, and I think that if you go through a particular year. And even when it's a good year, you're still going to have 2 to 3 market pullbacks. We saw one obviously back in April, which was down about 5%. And depending on what index you looked at, you looked at over the last, not counting today, 3 days prior, I think the Qs went down about 5%. So, that's in line with what, a market dip. Sometimes it's more than that. Sometimes it's 5 to 10%. But, these things are going to come at us and they're perfectly normal, right? That we have dips like this, and every time we have one of these dips, we kind of just go through the checklist of things that we want to see. And one of them on the checklist is, the VIX coming back down. So again, I think it also is complicated a little bit because Friday and there was most likely going to be a political announcement, and the VIX didn't really collapse. It kind of hung in there for the day, but there you go, down 10%. So does this mean that we're out of the woods and we're not going to get any more volatility? I think that really the shift is going to come into with what kind of earnings reports that we get, and that's really going to be not so much macro events, but it's going to turn more to micro, and we're going to have to see what kind of earnings reports that we get. We get two interesting reports that come out tomorrow, which is Tesla and Google, and we'll see how the rest of the reports go. But the earnings have to be strong, right? And that's one of the keys of in any market. Bull market is that you have to have names and leaders come out, and not to say if those two names go down tomorrow, it doesn't mean that the bull market is over, but we're going to have to see names that are going to do very well. And even if it's not some of the bigger names, maybe it's other names that step up and become those market leaders, right? We've certainly seen some good reports so far, right? So before I go into the S&P chart, but we have some names that did really well. UNH, which is a big company, it's I think the largest weight in the Dow Jones Industrial Average, had a really good report. ISRG had a great report too, and some follow through activity there. Netflix reported last week, and they had a really good. I thought they had a good report. Just they brought their guidance in a little bit, so that's gonna be a little bit of a ding on a name that's gone up a lot, on a name that's had that has a little bit higher valuations. And that's something to kind of think about as we progress through earnings season is if a name doesn't come out and beat their expectations or have strong guidance, the stock's probably going to fall if it's gone up a lot, right? That's how it works. And some names which have been beaten down, even though they don't have good guidance, they might actually go up because the bad news is priced in. All right, so just a little bit of a couple thoughts before we get into looking at S&P futures, which we'll do now. But I thought that the valuers really gave us some great, the MarketWebs, the valuers really gave us some great levels to watch. The first one was the top of the value area for the month of July. We had these 3 red days and a dip in there and not much buying there on Friday. But look at the comeback today and back above the value area. Now it gets a little bit more complicated. So let me just go back with one more thing. Right. So that gets us back above the 20-day moving average, but not quite above the 5 period moving average. And again, I like to see price above the 5 period moving average when we're in a strong uptrending market. We basically had that for 2 months. For the whole month of June, even though we went sideways there at the end of the month. month, and a good portion so far, halfway through July. By the way, remember, one of the last videos I gave, I talked about how it's very difficult to get two halves of a month that are very strong. Usually you see one half that's strong, and then another half that's a bit weaker. It's just difficult to get the whole month to be very strong, right? And we've seen that a couple times now, right? May, first half of the month strong, second and a half weaker. June, first half of the month super strong, right? And then wasn't necessarily weak. We just went sideways for the remainder of the month. But same thing in July. First half of the month strong, second and a half not as much. All right, so that's just playing out. So again, all of these things I think are quite normal. It's difficult to get a full month that is very strong. So I mentioned the that price got into got back above the value area. Also, right, this is the oops, what did I do here? Let me just go back here 1 second. All right, just had to straighten out something there on my end, but we did make it into the value area for the week. So notice how this now says bullish 80% rule. I would let this establish itself a little bit more inside the value area for the week. But as long as we're above 5604, that bullish 80% rule is technically in play, right? And if you're not familiar with a bullish 80% rule or bearish 80% rule, what that means is if you start a period, right, or you start either you start the period inside value or you start below or above, and if you fall out of the value area and then re-enter it, that starts the rule over. But in this case, we started the period below the value area, and now we're getting into the value area. So once you do that and establish yourself firmly inside value, which is, I'm not sure I could say that yet. Maybe if we get a little bit more inside this value area, then I think this is in play for the week. A move all the way through the value area. So again, that's a pretty big value area. That's 2% up, but it is what it is. And if you're not familiar with this rule, you can Google it. Google value areas 80% rule, and it's a principle that's been around for a while. Just not that many people use value areas to do this. Remember, there's been various people who have used volume profiles and value areas to trade S&P futures. We do it to trade, to look at anything, right? And it's pretty successful as we do it. So let's talk about I always go to the Qs next. We're still in some trouble here because we're inside the value area for the month. You could see same thing. Just as I went over, this is a situation where we started the month inside value, never went from one side to the other. So once we broke out, and now once we come back in, because we haven't gone through from one side to the other, this rule is still in effect, and now it's bearish 80%. So we had a nice rebound here. What would negate it? Because again, it's not a 100% rule, it's an 80% rule. So what would negate this is if price got back above this 20-period moving average and 487.16, right? So there you have it there. And then to take things, because again, a lot of times I look at the 1-hour chart because you find short-term clues on direction. Notice what we did today. We started the period below the value area. Again, this value area is determined by the market profile from last week, right? So that's why it becomes very important, because it's all of last week's activity with about roughly one standard deviation around that activity. Notice that we had some difficulties, right? We kind of got in there around like 9-10 o'clock in the morning. We fell back out, right? And then we kind of got back inside. And for now, we're hanging inside the value area for the week, and that has also triggered the bullish 80% roll. As long as we stay above this 480.37, we break back below that, and all hands off, for that. And the other thing to realize too, to kind of not rule anything out here, is that we don't need to go down and fulfill that bearish 80% rule like straight down. It could be a little this. It could be that we retest the top of value and fail here too, and then break back down, right? So there's a lot of things at play here. But the first thing I would watch is that bottom of value on the 1-hour chart, as we just went over, right? That's as easy as it gets, right? And say, okay, here's a level I want to be long against as long as price stays in here. And that's 480.37. All right, let's talk about the small caps today, which were very impressive. Here's the I'll start with the 1 hour chart this time, but look at what happened here. Right, price actually started differently than S&P and the Qs, which both started below value to start the week. Right, this started inside the value area, and it made a real nice test of support because at one point the S&P small caps looked like they were diving for the day. They were down about 60 basis points, tested that bottom of value, tested support perfectly and bounced. So this is still playing out. It's not an 80% rule because again, price has maintained inside value. We didn't start below, we didn't start above, but your resistance is 222 here. Right, so it's a pretty nice comeback from the big fade that we saw at the virgin point of control on the 1 hour and also the virgin point of control takeout on the daily, right? So, that's a full-on rejection that we saw last week after a big move up. Now, what I would also watch here on the daily chart, just to kind of complete this, is watch this 5-period moving average, right? As I mentioned in one of the previous charts that I was going over, I like to see price get back above the 5-period moving average after a big move. And so that'll be the test. If not, if this fails here, then you got to start looking towards, maybe this 20-day moving average catching up to the price action. So I think that's at a crucial area where this closed at. But, overall, a heck of a day for small caps. Right, they finished up 1.5%, just around what the Qs did, and microcaps were even better, up 2.1%. That's IWC, by the way, so outpacing those quite nicely. All right. We can get into a little bit of sectors, but really strong was the semiconductors. I always go through what is the strongest, and just to kind of go over this. But clearly this had a big move down last week, and this was the worst sector I believe last week was the semiconductors. But even though they closed below the value area for the month of July, right back in there, still will have some overhead work to do, but pretty strong. And we've got a couple of reports out which might dampen the mood in what happened today in semiconductors, because if you look at SMCI, this is bringing things down a little bit. I think also Cadence, last I checked, was down a little bit too. Both of these, I think, had softer guidance numbers, right? So that might hurt the semis a little bit. I also wanted to review XLK, and I'll go through a couple other sector charts, but XLK got down to support and bounced, right? To the technology ETF. All right, a few other sector charts. I mean, this was pretty interesting to me because if you're bullish, if you are bullish the IWM small caps, then you're going to need a rally out of KRE most likely, because the regional banks are the largest weight. It's not that's not a 100% certain statement, but the banks are financials are the largest weight in the small cap. So this is really nice. I mean, again, it's pretty amazing. And if you look today, right? So by the way, KBE is all banks, right? KRE is regional banks, and KBWB is your bigger money center banks, but KBE is all banks. And remember, XLF is not all banks. Where's XLF here? Notice the difference between the financials today and the banks. That's because in XLF, there's many other things, right, than banks in this financials ETFs. For example, you have insurance companies, you've got exchange stocks, you've got a few other groups besides, and you could see the difference today. Right, so here's KBE, by the way, the banks. And what's interesting is I was looking to go long JP Morgan today, and JP Morgan is not on the list. JP Morgan didn't really participate today. So your much smaller banks did very well, right? Your Truist, your MTB Bank, what is this? Triumph Financial, right? INDB, Independent Bank Corp. These are mostly regional banks. Now you got a private equity company in here too. Apollo APO did very well today, but if you notice, what's absent here is your big banks. So and here's the difference. So if we go into XLF, so again, I always find these kind of things interesting, because sometimes you think, oh, the banks were up today. The financials must have been, the XLF ETF must have been up big today. Wasn't. Schwab had actually Schwab was your biggest day. Bank of America was down. We know that Berkshire trimmed that. Citigroup was down as well, like down on the day, right? And a really, really strong day. And I don't know where JP Morgan is here, but I don't see it so I kind of finished somewhere in the middle. PayPal, for whatever reason, is in this ETF, and that was up 2.4% too. MSCI, so Blackstone was up 1.9%. Private equity companies have been doing pretty well, by the way. We can look at a couple of these charts, right? BX, which is on the strong earnings list that we've been putting together for the new earnings. KKR has also been acting very well, right? And APO is probably I think APO is kind of lagging the group a little bit, but that's a nice move there too. Here's JP Morgan, by the way. JP Morgan, this was one of my better trades last week, and I was looking to re-enter it, but hey, if it's not there, it's not there. But this worked really well for me. Berkshire worked really well for me. Um, I think you got to go .B here. I had this problem about a week ago. It came back a little bit today. Didn't have huge momentum. And the other name that I was long to was Goldman, right? These were not where the banks had big strength today. So for IWM to continue, going to need to see this, the banks continue to build strength as they've been doing. Also the biotechs, which had a decent day too. I didn't do much in this space, but we could look at the, today, but we can look at what the chart's telling us. Nice bounce here, just needs to reclaim this. I did have Twist on the watch list today, which did pretty well. I did like this check back to the top, perfect check back to the top of the value area and bounced on Friday, and really nice follow through for today. So a couple other sectors I'm going to run through. XLV, which we're already covering, healthcare. A couple of names that I really like here, but they have earnings this week. Right? I put out a note about a week ago on Amgen, but this name is going to report actually not this week, but maybe next week. Looks like it's over there, but Amgen has been acting well. Here's XLV. Here's the whole healthcare group, which is now back above all the short-term moving averages. I actually tried to trade. It was very tricky last week. I had tried a trade on the dip last week in XLV, and it kept dipping, and I abandoned it here, and look at what happened. So could still get rejected here at the 5-period moving average. So we'll have to pay attention to that. And again, earnings could be the driver. I'm not going to go over every one of these, but you could see what names are showing strength. That's simply defined by if price is above all the short-term moving averages, the 5, the 20, and the 50. And you've got a couple of them, and a couple of them from last week. So here's the XLI, industrials. Again, the 5-period moving average must be a little bit different. I'm using Bloomberg API for those, right? And here's XHB. Which is also back above the 5-period moving average after getting a little bit toppy. I actually shorted ITB on this last week, just thinking that it was gone too far. But look at it come back, hold above these short-term moving averages. So that's impressive, I think, for some of these groups to do that. All right, I'm going to, like I said, I'm not going to go over every one of these. This is how our weekend watch list behaved. Pretty good. So I'll go over a couple of these names with you. NVDA, small company, probably heard of it. I'm joking, of course. Nice hold of support. I specifically put this on the watch list because I think it is an important company, not just for AI, but for overall the semis, and held where it needed to and bounced. I'm not sure you're going to get much more out of it. The top of the valve, because it did make it to all the way through the top of its value area. So what I was saying today to members was that today kind of felt like point A to point B. And point A, if you got long, like on the dip, then I would have said point B, which is 123.92, is a place where you take short-term targets or take your profits. Now, if you want to play for more than that, then you got to see it get above 123.92. But I view today, after a 3-day move down, is a day that you just want to see some good price action, and And NVIDIA did that for you today and moved all the way through to its value area. Another name too was, which I view as a bit, and some of these names I view as a bit risky because of how much they move in a given day, or they can move. But this CORZ did very well today. Right. This is Core Scientific. And the reason why I kept it on the watch list from the week before is because it held up pretty well. Other than that big one red day, it kind of came in and it held the top of value perfectly on Friday. And look at the follow through for today. Right. Coin was a name that I wanted to participate in today, which I did. It did pretty well. It almost broke down. I was watching this, but it went right to my stop price. Um, and then it held in there, which I got a little bit lucky with that because I almost got stopped out at 254. And it started to break that way. And I said, well, let's watch to see if, because I got an alert saying it's going through my stop price, and it held the next candle, very next candle, it got back above. So that 5 period, or excuse me, this 200 period moving average is something that I pay attention to. And I kind of put my stop price around there because it had a little bit of a fake out in the beginning of the day, but it carried through. So level to watch for tomorrow is going to be right around 266. And I did take one target in it because the trade went red on me. And once I see that it's green after being red for a portion of the day, I always take a target. It's kind of one of my little rules here. Um, that one did well, and just a couple other ones on our watch lists. This CDNA, which members brought to my attention last week. I liked the digestion after this thing. Right, so here's what this CDNA. Let me get the right chart up here. Right, but here's what I'm referring to. Real nice break higher, then like lots of little consolidation. Went lower today and then green, very strong. And I think this heads up to this VPOC up here, which is 2013. Right. So again, another, smaller cap name on the list. Twist we already went over, and then AMSC, right, which was a leader in the semi space. Again, a little bit of a smaller cap name. Um, but it reclaimed its value area. And I put this chart out earlier. The other thing I said was it needed to regain the 5 period moving average. Didn't quite do that today. But the good news is it's above its value area, and you could use 2707 as your support level to watch. One other name that I thought was interesting that I like to buy on dips is Arista Networks. And this also got back above its 20-day moving average and value area for the month. I would watch this 341 level for tomorrow. All right, I think that's enough. There's plenty of other names to go through, but I'll leave it there for now. Guys, have a great night, and we've got more levels to watch for tomorrow and a lot more earnings. The last name I'll go over is CrowdStrike, because I mentioned I would go over CrowdStrike, but my thoughts always, whenever it's the same thing, you may have heard this rule before, you may have not, but it's called the 3-day rule. And it usually applies to earnings, but I also apply it to bad news. When a company misses earnings or has a bad quarter, or there's something that people didn't like out of their earnings report and it falls, I will wait. And even if it's still like thinking like it's not I don't trade names that break down, but let's say it checks back to support. I usually wait 3 days, right? Because 3 days allows the bad news to be processed, right? I never buy anything once there's bad news on the stock, right? At least I try not to anyway. Once there's bad news on a stock and a stock is falling, let it work its way through, right? Because, this happened on Friday. This morning, a bunch of brokers downgrade it, right? You'll probably see another broker or two downgrade it tomorrow. And look at this thing. I thought, hey, well, maybe if it holds on to the 200-day moving average, but why bother? Other than, so what happens, I know, with retail traders is they get hooked on a name, right? And they can't let it go. Just forget about it for now. Wait until, put an alert. Maybe if it gets back above the 200-day moving average, then you have something. Because if you buy it now, right, where are you going to sell it? Like, think about what you're going to do. What if this name keeps going down, right? To say 220, 200, right? You don't know. Now there's a VPOC down here at 256, and I'll be watching to see what it does there for those purposes. But I don't want to, go out and start buying, um, buying a falling knife just because it has name recognition. Because I've seen this play out many, many times. I was comparing this a little bit to, even though this has nothing to do with this, but if you remember what happened with Chipotle, and I know this is long forgotten. This was back in 2015, right, where this happened, where they first came out with a story that they had a problem with their food. I don't know if anybody remembers that, but and since then that story's been long gone, and it was a good buy, a dip opportunity. But when from the time that story kept going out, went out, and they had problems for a while. There wasn't just one headline. Right? I think they had this problem for a little bit, but yeah, but you could kind of use this for any any situation. If I can get there to 2015 or 2019, so bear with me. Here's 2018. Here's all right. So here, oh, that's still 2018. So let's just bring this back up. Just widen this out so you can see the full screen. All right, here's when the stock dropped. Right, they announced originally that they had some issues, right? And oops, let me see. Maybe I'm just not there yet. There we go. Let's crunch this. Okay, so here's where we are. Right, 2015. They announced that they have some virus, something that they found in the food. Here's the initial drop. Right, then look, dun, 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 dun. Okay, it bounces, right? Maybe you played this for a bounce, gets back above the 50-day moving average, head and shoulders comes back below that 50-day moving average, goes sideways, sideways, sideways. This is years, 2016, 2017, 2018. So when you're buying the dip in something like this, does that mean that you're going to stay in it for 3 years? It's a long time, right? Because I'm not saying that this happens the same way for CrowdStrike, but you got to put things in perspective. I never will go. And so it took from the time that it fell on this news, it took 4 years for it to come back to where the initial drop was. Let's say you bought it down here because you thought it was a good buy. You still had to wait over 3 years for the for you to get your money back. That's not a good trade in my opinion, because not only do you have people forget this, right? They're like, they think that that's the only thing, but you have to think about your opportunity cost, right? And how much money did you lose by not being in something that was going up, right? That's something that didn't have this issue. So that's what I think about CrowdStrike for now. I'm in no rush. I don't even care. I hear people talking about it all the time because I get it. It's in the media and it will stay in the media for a little while, but you have to wait until people forget about it because this is an overcrowded long. I sold this stock on Friday. I was long in the TTG trend portfolio. I've been long this name for a long time. I don't, it doesn't matter. Right? You got to think about it. You can't get emotional about, or don't get emotional about a stock. There's no reason to. Let it set up again. And if it's a good stock, it'll come back. If it's a good stock, it'll get back above its 200-day moving average. Right? And that's enough for me. All right, guys, have a great night. See you tomorrow.